Hi everyone, let's cover my Elliott wave scenarios on Bitcoin and talk about the probabilities at the end of this video. Starting with the first scenario, which is your bullish scenario, where we have a finished three-wave corrective structure and we would expect the all-time high to be taken, or at least minimum a retracement to the 0.9 Fibonacci, which is sitting at a level of 110.6k. Now this corrective structure is a WXY double zigzag, ABC in W, triangle in a wave X, and an ABC in a wave Y. After which we then look for an impulse to the upside labeled as a wave 1, we look for a correction in a 2, and then continuation to the upside. The common target for your wave 2 are these fibs here, the 0.5 to the 0.786, taken from the start to the end of your first 5-wave move towards the upside. The 382 is generally a minimum retracement target at 104.5k, and you don't want the 886 to be touched for a wave 2 that is incredibly deep and would lower the probabilities. Now you can see that here this blue line moves to the upside a little bit, which is because of the weekly naked point of control at 109.6k, and generally in that area we do have a bit of confluence, as you can see, before the all-time high would be reached, so it definitely is an area of interest. At the moment, however, we are struggling to move beyond the value area high of these volume profiles. You can see here it's acting as resistance. I've shown these volume profiles in the previous video and mentioned that it is good to keep an eye on these levels, and for a good reason, as we can see locally. Now, the 112 scenario I spoke about in the previous video, which didn't have the highest probabilities, is not really something I'm looking for. And what I mean is that potentially there was like a 1, 2, 1, 2, and eventually look for a 3. By now you need like a triple 1, 2 and look for a 3. It just looks unlikely. The weekend is coming up as well, and the weekend generally is a ranging or a corrective structure. So if there's going to be some volatility, then let it be today, but I'm not really looking locally at a triple 1, 2 at the moment. This move to the upside would look better as a 5-wave structure for bulls at least, compared to counting this as a multi-1-2 structure. And if I jump to Discord, I can show you a couple of examples. So when we look at a multi-1-2, we like to see this. So this is from the 49k low and price moved up. You can see here the overlapping price action. That's what you like to see when you think about a multi-1-2. Similar over here, right? The low at 74k with the potential of a multi-1-2. And similar over here, the low at 25k. Right, that was 2023. You can see a multi-1-2 with overlap, and then eventually it moves towards the upside. Now that's what you want to see if you would expect a big explosion to the upside. But the current move to the upside from the local low looks more like something like this. So I posted this yesterday in the silver update, sharing my thoughts. So you can see like a 5-wave move, and then you get a bigger range or a retracement. A 5-wave move, a bigger range or a retracement. You can see the gap here in the middle as well, between the first little range, second little range, and then you get a longer sideways structure. And this is, of course, only focused on the bullish scenario. So here again, 5-wave structure, 112, 445, and then you get a bigger range. A couple of more examples. This was the drop to 49. I'll talk about this one in a second, right, with regards to the more bearish scenario that I have at the moment. Here another 5-waver followed by a bigger range. And I guess you get the idea. 5-wave structure, bigger sideways range. 5-wave structure, bigger sideways range, another 5-waver at the low at 15k, then a retracement, right, which eventually leads to a range. So when we look at the current structure here to the upside, you can see that it doesn't really look like a multi-1-2 structure. It looks better as a 5-wave structure, at least for the bullish scenario, right? You would prefer to count this as a 5-waver, meaning you would like to see a retracement / a range to form. And that is also what the polylines show you. Of course, by all means, you don't want the low to be taken. That is an invalidation. And then we have the second scenario. Didn't really change. The WXY, it's a bigger 3-wave structure. And then we look for price to move towards the upside. Wave X can be put on this high or somewhere over here. As mentioned in the previous update, if you do put it there, you want to have a wave A, B, C. And I do have something to add with a flat in mind. So an ABC, I'm talking about a flat. Common target is this blue area here, which we almost touched. And in confluence with the 1.38 is this weekly point of control at 109.6k. And also before price reaches the 1.618 here at 111.7k, there is still a bit of confluence. So it's definitely at least interesting to keep an eye on a potential flat, which then means that the flat is a wave Y, because X goes here, and then you would have A, B, C in a wave Y. Wave B in the flat, however, has to be a three-wave corrective structure, so you would have to count this as a three-waver, and the only way really to do this would be a zigzag family structure, and in order to get that high, or get another leg up, preferably would then be get a W over here, get an X, and then a wave Y, and then ABC, W, X, ABC, and a wave Y. X is very shallow, has to be said, right? Preferably, of course, if you do look at a double zigzag, you get W, X, and then a wave Y, and X at least touches the 0.236, 0.382 Fibonacci, which if we take a fib here from the low to the high and we toggle on the retracement, then you can see the 382, not even close to the 382, 236 also not touched. As you can see, not looking for wave A, B, C as in a 5, 3, 5 inside the B for a bigger A, B, C, because your wave A already took out this high, which is the origin of wave A of the flat, right? A, B, C. So it makes more sense to look at multi-zigzag structures, and the WXY is one to keep in mind. But mind you, wave X can also be put here, right? And they have A, B, you look for a wave C. Wave C by itself is a 5-wave structure, so that is very similar to the bullish scenario where you look for a 5-wave move towards the upside, but in a bearish case that would be labeled as a wave C, and then you look for price to move towards the downside for your wave Y. Wave Y in that case is then preferably a flat ABC or a triangle, because wave W is already a zigzag, and in a sideways WXY, wave Y is not allowed to be a zigzag. That's something that I believe is quite interesting, is this. So I thought about this yesterday when price was grinding here slowly to the upside, and I was doing some research. And then I thought of the range between 73K and 49K, right? We were in that range for a very, very long time. So this one over here. And when I look at the current price action, it made me, in a way, think about this range. And you can see the overlap. So this is a bars pattern for the ones that don't know. You can find it here on the left. And then it is the bars pattern. And then with the bars pattern, you basically select the start of this range to, wherever. I eventually put it somewhere here so that you can see the move to the upside as well. Because in general, right, when we zoom out, instead of looking at the detail, probabilities are higher to still take out the all-time high, as probabilities higher that this range over here, whatever is forming, is corrective, not impulsive, increasing probabilities to at a later stage move up. But at least I wanted to show you this bars pattern, right? Like price, it doesn't rhyme, it doesn't repeat, but it can rhyme. And for the WXY scenario, one could look for potentially something similar, right? So we have the first move down, we get the first move up, next move down that creates a new low, we get the next move up, preferably as mentioned in the previous video, right? With good reason. A lower high would be nice. It leaves a bit of liquidity here as well. And then eventually you get another retracement. Now for a wave Y, by the way, the retracement does not need to take out this low, right? It's not necessary in a wave Y, but it is an option. And below the low over here, we do have this point of control, 96.5K. And that is a point of control that you take with the volume profile from where we are now all the way to over here, which is like November last year. And you can see the point of control. All right, so that's an important level. And the local low over here, right, on my chart, I did not have any levels, and generally price does respect my levels turning around at my areas of resistance or areas of support. And interestingly, I didn't really have anything going on here at the low. So at least I keep an open mind to seeing another low and keeping an eye on the point of control. Now I do realize, and thanks for the comments, right? Everyone has a different analysis style and uses different tools, even though most of us, of course, use Elliott waves as well. Some were talking about there is a pitchfork, middle of the pitchfork thing going on over here, or other people have maybe a support resistance area here. For the people that have been here for a longer period of time, you know what tools I use, right? You can find them even on YouTube as well in the What You Should Know as a Trader playlist. And I did not have anything going on here, not a daily naked point of control or weekly or monthly naked point of control, nothing with the PVP indicator, no daily or time frame horizontals or other stuff. So it's definitely interesting here. And also we just missed out on actually over here retesting resistance into support. It was close, but no cigar. We just missed out, as you can see here. And if we would go to a weekly time frame and we zoom in a little bit, then we did have a gap here. And I spoke about this gap a few weeks ago. It was respected once, respected twice, but eventually still not filled this gap. So, you know, we just missed out, as you can see. If you close a daily candle, by the way, inside this gap, the probabilities increase to close the gap. So if I show you the gap over here, you can see it's nicely respected on a daily time frame. If you do close a candle in here, probabilities increase to fill the gap. But naturally, if you come this low, I mean, might as well look at that high time frame range point of control. No? Definitely interesting. So yeah, the bars pattern, interesting overlap, something to keep in mind. It's definitely not like necessarily tradable, as price doesn't repeat, but it rhymes, and I do keep an eye on it. And it works nicely actually with the resistance up here and potential support down here as well. So I just wanted to show you. Now, we do have some news also still today. It's been a news-heavy week, even though the volatility has been quite meh. A bit of a push in the beginning of the week, but actually it was very, very slow and overlapping, grinding price action here. But maybe today we get some fireworks. The weekend is coming up. Weekend generally a ranging structure. If we do get volatility, let it be today, a Friday here, 2:30 p.m. Central European time. This is generally some stuff that can create a volatility. Right, the PC price index, whatever. I don't actually know what the news is. I just recognize this with the volatility history that this kind of news can bring. So that is interesting. So let's see what we get. But just make sure you trade safe because of that potential volatility. Now, if I then put all the levels on my chart, in case you want to copy those levels, these are the levels that I have on my chart. These are the horizontals that are around a price. And then we have the two volume profiles. One is pulled since the beginning of this range over here, since where price is now, till where price is now. And the other one from the all-time high to where price is now. And you can see acting as resistance there. Then we get to the probabilities and the polylines. So yeah, I'm not really looking at that multi-1-2 structure. And it wasn't the highest probabilities anyway, but it becomes a bit more interesting on the number one spot to look for a retracement. Impulse wave 1, right? If you would count this as an impulse in a 1 or an A, but let's focus on a 1. And then a 2, you would expect a retracement or a bigger range before a 3. And if you would look for a wave X, Y, and then a bigger corrective structure, you would also look for a retracement because of your wave Y, preferably being a triangle or a flat structure. Not really looking at a double 1-2 and just flying towards the upside, especially just before the weekend. And the structure doesn't really allow for a nice multi 1-2 here. Looks better for a retracement or a range to form. Generally though, if you do zoom out, so if I remove the polylines for a bit and we just look at this structure as a whole, the probabilities are higher to eventually take out the all-time high. The structure since all-time high is higher probability corrective, not impulsive, increasing probabilities to eventually move up. I never counted this as a highest probability 5-wave impulse to the downside for good reason, as I explained in many videos. And that immediately gives a bias to eventually continuation to the upside, right? Now, with regards to the levels, important resistances, support, you've already seen them in here, but here they are written with their numbers. So resistance, of course, we have the value area highs here, but an interesting pocket of resistance is a little bit above us as well. Then to the downside, support, you can see different things. Daily naked point of control, bit of confluence over here. And then comes that red line there at 96.5K. So that is what I'm looking for. These are the scenarios. Make sure you trade safe and of course, have a very nice day as well. Hopefully you found this video helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.